Hello, good afternoon. You're watching Closing Trades on 80 now. I'm Anisha Jain. With me is Ajay Sharma as well as Aisha Faridi. And for now, the market has been very volatile throughout the trading session. A lot of those jagged edges and the flip-flops between the red and the green is what we have seen. For now, we are pretty much flat for the trading session as far as Nifty is concerned. The Bank Nifty has been underperforming today for most parts. Right now as well, that index is sitting with a cut of around 100 points. Broader markets are actually doing a bit better, so there is a bit of a comeback when it comes to the broader markets today. And in terms of individual movers, Reliance continues to be the biggest puller on the upside. L&T too has been doing well, while on the losing side, it's TCS as well as SBI and to an extent ITC as well, which is dragging its feet and the market itself. Sectorally, it's real estate that continues its good run. Phoenix Limited, Prestige, a couple of these companies got the target price upgrades from Citi as well, so that's partly the impact. And then from the auto pack, you have Sona Comstar, which is up 6%. We'll try and get the management later in the show to talk to us more about that PLI scheme for which they've got the approval. But I think, Aisha, it's a lot more stock specific, Vodafone, etc. These are the stocks which are in focus.
Oh yeah, absolutely. Geo Financial Services, it's surging, and on the back of high volumes as well. The market cap has now crossed that 2 lakh crore rupee mark as well. And remember, this is one of the most newest listings or offshoot from the parent, that's Reliance. Geo Financial Services scaling higher by nearly 13% as we speak. It's well above that 300 rupee per share price point. Besides that, of course, there's clearly Vodafone Idea, that's been the star performer today. They're looking at considering that fundraising proposal via shares and bonds. Feb 27th is the date which has been marked out. 9% of an uptick coming in for Vodafone Idea as we speak right now. Indiabulls Real Estate has been the other one which has been in focus. We will talk in greater detail about that. But that stock as well is sitting at the high point of the day, spiking up about almost 4% as we speak.
In fact, Aisha, I was talking to some people in the dealing room. The buzzword today is rights issue. Indiabulls Housing just completed a very successful rights issue where they have thanked the investors and kind of hinted
about
a rights issue. Yeah. In fact, just to finish that, Indiabulls Housing, pull up the housing, they have thanked their investors for the Samman which they have given, hinting that Samman Financials actually could be the next name. Pull up the Indiabulls Housing chart, it will cross the 200 mark. You're talking about Vodafone, yes, the buzz of rights issue there as well. Swan Energy, back to days high, completion of another rights issue. And in fact, Geo Financial too. There are certain small sections in the market which do believe that there could be a rights issue there as well going forward in the next few months where promoters they want to raise their stake here. But anyways, right now it is only about 12% gaining. So that's the kind of rights related buzz on the street. But advanced decline, look at VIX, you will see absolute quiet out there. And that's the reason why it is all about individual stock movers today rather than the benchmarks. Kunal and Nuresh are also joining us. Look at that, absolutely flat. Advanced decline will also come up on your screen. But let not get our views get clouded because of that. Actually, the broader market and small cap, mid cap in particular, absolutely flat. See, there is a lot of individual movers which we will identify for you and talk more about. But Kunal, how do you trade this kind of a market, Nifty, Bank Nifty? No trend out there?
No, you trade more positional rather than more intraday in this kind of market because yesterday it was pure large cap names. Today it's a bit off. I would not say a major correction for large caps, but it's a bit off. It's a bit more scattered in terms of the large cap performance today. The stocks which were doing pretty well yesterday are a bit somber in trade for themselves today. But I think the mid caps and small caps and individual stocks have picked up. There is volume chasing the the momentum for these stocks, and that's always a comforting sign for these mid caps and small caps. If they have to sustain the rally as well as the breakout for themselves. I think the bigger point over here is the India VIX cooling back towards that 15 mark, which I think is a very comforting factor for the indices because I think till yesterday or day before we were almost at 15.9, 16 plus levels for India VIX, and the lower we get below 15 mark or the closer we get close to the 15 levels, I think the comforting it would be more comfortable for the index traders to try and hold on to their positions as well as maybe build up fresh longs on the indices.
Okay, that's the take coming in on what the market texture is looking like right now. It's clearly the broader market. That's where you're seeing big strengths. Look at movers like a BEL. It's scaled up about 5%. Indus Towers is scaled up 6%. There's Astral, which is up 6%. And Idea, of course, sitting right on top there. Naresh, any lively movers, a trend that you may be picking up from the mid and the small caps?
So in terms of a technical structure, Indiabulls Housing is a good breakout. If you look at it, the stock was range bound. Finally, the stock has crossed above that 195 mark. So that looks promising. And then the NBFC space looks interesting. You have Shriram Finance hitting very close to new all-time highs. You have IDFC Limited making a recovery, IDFC First Bank making a recovery. So we are seeing it get broader in the sense that a lot of NBFCs are doing well. It's just the HDFC and Kotak which continue to be laggards and keeping the markets in control.
From the auto ancillary, I would say the complex machining part of the auto ancillary group, there's a company which has done a recent IPO. Standing out in trade today is Sona Comstar. Rohit Nanda, Group CFO of Sona Comstar, is joining us now about a news trigger, which is that they have been given PLI to manufacture EV parts of two-wheelers. Rohit, help us understand how big is this opportunity for you? You are incurring capex also regarding it. How sizable can it become of your future revenue streams if I see, say, 2 year far out?
Sure. So look, one, it's given how the scheme is structured, it's hard for one to quantify the benefits because while the percentage of benefit that we'll end up getting is defined, it's a percentage on our revenue. But then, since there is a budget for the government, finally what we end up getting would be also a function of how much is the aggregate industry claim on this scheme. So therefore, I would refrain from really quantifying it, but it will be sizable because let's say for this particular product that we are talking about, it's in a product segment which is already generating 5% of our revenue. So this is a product which is a hub wheel motor. We developed it in-house about 2 years ago. So we've actually been selling it for 2 years and we would already be one of the largest Indian manufacturers for this particular product. And going forward, there is a decent traction in terms of the product and also the fact that electrification in the two-wheelers is also gaining pace. So 5 years is the duration of the scheme. So we expect it should be a sizable benefit. But we are looking at it more from the standpoint that it enhances our competitiveness rather than merely looking at it from, let's say, adding to the profit.
Mr. Nanda, there is a part of the street which is a bit worried about the margins of this particular product of yours. Right now, it's 5% of the business, but given it's expected to scale up, do you think it could be margin dilutive at the aggregate level? Or do you think the incentives that you'll get from the government will probably make up for it? What do you think will be the impact on the profitability, accretive or dilutive?
So look, scheme would eventually be accretive only. The thing is that the benefits from the scheme will enhance our competitiveness, which means that this should help us win more business. So on the whole, it is only going to be accretive to the profitability of the company.
Accretive overall margin level for the company in terms of the EBITDA margins?
Yes. So, when we talk about the margins, we generally give a range. So historically, our margins have ranged between 25 to 28%. So given the product profile and the order book, we expect the margins to stay within that 25 to 28% range in the foreseeable future.
You wouldn't be able to tell us right now as to how much of capex would you have to deploy, or if you would have to, raise fresh funds to be able to cater to the two-wheeler EV demand?
So look, like I said before, this is a product which we started making more than 2 years ago. So the capex outlay is already there. It's part of our existing capex plan. So some bit of capex we've already done in the last 2.5 years, and going forward also that capex is there, which is already part of. So there is no specific capex, I would say, which we have to do over and above our original plans. So it's not a new product that I'll start making, going forward or something. It's a product which I've been doing for 2 years. We had developed it in-house. Similarly, even other products also, if you see. If you look at our order book, it's 24,000 crores of order book, of which 80% comes from electric vehicle segment. So all of this is part of our electrification drive, wherein, we started making EV-focused products way back in 2016. So this, in a way, is playing out, our overall strategy of increasing using EV as a growth driver for us.
You have a 24,000 crore order book right now, and I was looking at what the street is estimating your top line next 2 years. Around 5,000 crore is what I'm seeing it right now. And you are adding capacity across your product line. Do you have good visibility of, say, 3 to 5 year period of a 20-25% kind of a top line growth because of initiatives such as this and other product line addition which you are doing across CapEx?
So look, the order book of 24,000 crores gives us, I would say, decent visibility for the next 3 years or so, because most of these large programs will come into production over the next 3 years. So I would say this gives us decent visibility for the next 3 years. We don't give revenue guidance, but I would maybe like to point out that, historically we've grown at a CAGR of above 25%. So given the order book, I think it should be possible to maintain our growth trajectory.
Quickly, before we let you go, this is one of the products that you've got the PLI approval for. Any more in the pipeline? I understand differential assembly for EVs and other things are also in the pipeline, perhaps?
So we have already put in 7 product applications. So this is the first one to be approved. Rest of them are being assessed. There would be another 3 to 4 more product applications, which we will be submitting very soon. So as you may know, there is a process of evaluation of the product as well as the domestic value addition, which are the key conditions in the scheme. So we'll have to go through that process, but we are fairly confident that we should be able to get all the approvals.
That's great, Rohit. We'll chat when you get those balanced 3 to 4 approvals that you're awaiting. But good speaking with you. Thanks so much for taking the time out.
Thank you.
Okay, that's Sona Comstar, and I don't know if we can bring up the last 1 year chart or not, but it's been quite a story ever since its rather recent listing, if I may say so, about a year and a half or so. That's Sona Comstar in trade for you. About a 40% surge is what the stock has seen in just the last 52 weeks. Flat for the index, all traction in individual stocks, mostly amidst the broader markets, which we'll highlight after this quick break.
To talk more about fundamentals, Mrinal, of course, the CEO and CIO at Incred. Mrinal, afternoon. Thank you so much for your time. Friday afternoon. Well, not a great time to talk markets. People are already planning their weekends. Did you come across that note? Very, kind of a very honest admission from Chris Wood this morning in the Greed and Fear, saying that yes, India is the best game in town right now. Superior macros, all of that is fine, but a kind of an admission that it is turning quite expensive. As a practitioner, are you finding it challenging too?
Yeah, good afternoon. Yes, that's a practical challenge. Yes, we had the market run up significantly in last 12 to 18 months. So it makes it more challenging. Obviously, when the valuations are elevated, the potential returns get subdued. So you need to also manage the return expectations, and you need to go down the ladder in terms of market cap. You need to actually dig deeper, and we expect customers to have a higher horizon when they make an entry at this juncture. It does become challenging when the markets have a very sharp run up in a short span of time.
Since you are saying that there is a possibility to jump in the market even now, you just have to stretch your time frame, Mrinal. Where is it that you still see value and growth both on the table?
Well, too much to ask, both value and growth. So value school of thought will find it difficult to pick a lot of names because clearly the valuations have run up. From a growth perspective, yes, you can actually, because We are very rightly placed in the trajectory for the economy. I think so from that angle, you can still try to narrow down on spaces. Let's say, for example, I would say rural would be a great place to be. There has been subdued demand. We have seen largely rural facing businesses seeing volumes contract in the last 3 years. But in the last 2 quarters in particular, we've seen that there has been a rest in that decline and there has been some green shoots of growth. Hopefully, in the next 12 months, we would start seeing rural demand picking up. And it's a very large part of economy. And rural consumption behaviors in terms of SKU preferences are very different. So we might actually, as growth percolates, as incomes improve, we would see definitely those SKUs benefit. So that is one space that we are quite upbeat about. We also think building material, particularly cement, is a very, very well-placed sector. It feeds into both housing as well as infrastructure. And that is a significant capex attraction for both the government and the private sector. The government continues to be a very large spender in the economy. The recent vote on account actually just cemented that. And we do expect that when, as and when the private capex picks up, there will be significant beneficiaries in that space as well.
Industrials, infrastructure related theme is something that you like, Mrinal, but I was just going through the fact sheet of your emerging business fund as well, and I see a lot of exposure to auto specifically. Almost 23% of the weight: Hero, Amara Raja, Maruti, Sandhar Tech. A lot of these auto names feature in the list. What makes you that bullish on the auto sector right now? Hasn't it run up already, and are you looking at probably trimming some of the position?
So, well, the large weight is in a way reflection of, as you say, the run-up that has happened in a year or so. But if you notice, it is auto and auto ancillary, and it is equally spread between two-wheeler, four-wheelers, and ancillaries. And within that, more towards volume trajectory. Like my earlier comment, we are also making a step into the rural consumption basket through this investment. So two-wheelers in particular is a very rural-heavy business. So clearly. But that weight is a largely a reflection of our investments having done well in the recent past.
Mrinal, I see cash and cash equivalent being 26%. Is that right? Is it that difficult to find ideas right now? And also financials is one space you're clearly underweight on. Are you turning the corner there and looking at financials positively, or do you think there's further derating which will happen in this year?
So on financials in particular, very stock specific, we've seen drawdown in one large name, looks appealing from a longer perspective, very, very stock specific. So we have been running a large underweight on financials, and that cash that you see, there would be some that would get deployed in that direction as we progress, as we find the risk reward getting interesting. But I would avoid making a blanket statement on financials because it wouldn't be fair, but there are compared to, let's say, 6 months ago, there are at least reasonable valuation, at least in a pocket or two over there. You can look at our cash as a proxy large cap allocation. We've kept that largely in anticipation of volatility in the market, and we would look to deploy it as the market does offer volatility and interesting prices.
From the large NBFC or the NBFC in particular space, what are your thoughts? Because we are talking about lenders, there appears to be a lot of activity there. Completely broken down, at that time, very large NBFC appears to be resurrecting, have just completed a 4,000 crore rights issue with marquee names coming in. Then there is, a South-based, one of the biggest South-based NBFC in talks to bump off their housing portfolio and focus on CV, which is their mainstay. Anything beyond just the housing in NBFC space which interests you, or some MSME names?
So very clearly in pecking order in financials, housing is the most interesting space to us. Our portfolio reflects that. Then we would prefer a portfolio mix which is more secured lending on the banking side in particular. And then on the NBFC side, our preference is for lenders who are having very robust credit evaluation process and MSME lenders. So in that sense, we are trying to step into the private capex side of things. And we do believe that MSME is going to be the biggest beneficiary as well as the driver of private capex in growth and employment. So that is how we place ourselves. And every NBFC, it's a combination of fintech, it's a combination of variety of other things. We have to look at it case by case basis. their geographical presence, their approach to business are very different. But the pecking order in our mind is very clear. We prefer the housing mortgage providers. We prefer the secured lenders on the banking side, at least the preferred portfolios on the secured side, and followed by MSME lenders.
So that's a view coming in as far as financials is concerned. But incrementally, Mrinal, which are the positions that you are looking to add? You mentioned industrials as one of the space, but what about healthcare as well? Healthcare and because I mean, off late we have seen a lot of spends going up as far as healthcare is concerned as a percentage of spends as well. Hospital stocks, however, are not really cheap. So how do you find value within healthcare right now?
A very interesting question. So healthcare is an umbrella which has gone far beyond pharma. Besides hospital, we have diagnostics. So a couple of diagnostic names look interesting to us. It's one of the names that in the new fact sheet might actually see presence. So we of late do find in the healthcare space diagnostic also a very appealing space. So where incremental monies could be deployed.
Great to have you on the show. Thanks as always for taking the time out and speaking with us today.
Thank you. Thanks a lot.
Let's just take some closing ideas before we take a very quick break and get into the last lap of today's trade. We're still flat for the index. Kunal, anything looking good?
Yeah, Reliance Industries is something which looks attractive. So I think closer or rather closing in towards the 3,000 mark on the spot levels, I would expect this momentum to continue for the stock. And it's been a rising consolidation. The stock has seen in the last 200 points from 2,800 to so far 2,980 approximately. So would suggest a buy on Reliance Industries.
Okay, and Naresh, what about your closing trades?
So that would be a buy on IDFC Limited. The stock is knocking around that 119.20 resistance, which has been there for the last 3 weeks. Has corrected well from 135 odd levels a few months back. So a bottoming out case, expecting a bounce towards 130 in the short term.
Let's take a very quick break with the note that IRCTC is now up 3%. Z has perked up 3.5%. BEL, of course, is knocking on record highs, 5.5% of an uptick, and Indus Towers has surged 8%. Though I don't see Idea in the top movers list, let's just bring up that intraday graph. Maybe it's fallen a little bit from the top of the day, just a little bit though, still at $17 or so. We'll take a break, come right back, track the last half an hour of trade this week.
Welcome back. Well, for the markets, it's a fight between the bulls and the bears clearly, and at the moment bulls have the upper hand because we're just around that flat line, but it's been a tug of war throughout the trading session. Nifty Bank also continues to be under pressure, but there was a bit of a recovery that we made from the lows of the trading day. In terms of individual movers, Usha Martin, Inox India, Voltamp, these are those small cap names that are coming up on the radar because in the last few minutes they have moved. Maybe we can pull up some of those stocks. Usha Martin, Inox India, Voltamp. You also have Adani Wilmar, which is up good 6-7%. JSW Infrastructure has perked up. So a lot of these names doing well. Keystone Realtors is actually coming under pressure. Let me take it to you, Kunal, and ask you from the real estate pack, which is the stock which is top on the list if you think about profit booking?
Tough one because I think if you ask me for a fresh initiation, then I would probably believe DLF and Anantraj are the two stocks which I would still consider. But in terms of profit booking, very difficult to suggest at current levels.
Okay, so no profit booking in the real estate pack, only increasing weights, and that is on DLF and Anantraj, which has been clear favorites as far as Kunal's.
He's hitting the gym next, plank, weights. Anyway.
I know, but let's take it across to Mantesh. Mantesh, do you have an answer for this? Which are the stocks you are taking off the portfolio from the real estate pack booking profits?
Generally speaking, the entire real estate pack is actually doing really well. This is because the overall housing demand has turned around quite strongly. Unsold stock, which used to be pretty large, nearing about 3 years to 4 years, a couple of years ago, is now down to 2 years, almost half that level. And therefore, the real estate sector is growing quite sharply well. It's very difficult to really pick. So if one were to readjust the portfolio, then one would only do a very simple arithmetic. The top performing is something which will go a little underweight, and the most underperforming is what will go a little overweight on. That's the only churn that you will do in the real estate pack per se. But then the other metric one could really look at when it comes to real estate sector, go for those which have really no debt on their book or have a asset light real estate model.
Right. Okay. Just looking at the market texture right now, it's Indus Towers 8% higher. Idea, even though it's come off a little bit from the day's high, still holding up well. Maybe Macrotech, or for that matter, Keystone Realtors may not be holding out, but Godrej Properties sure is. It's sitting at the high point of the day. It's a 3% spike that the stock is currently seeing in trade. Bring up that stock price up for you. And then, of course, Indian Hotels as well. And I think it's already scaling at its life highs or around that mark. 594 is where Indian Hotels is. And I think the entire hospitality sector as well holding out still pretty okay in trade. Mantesh, still got valuation comfort in these hotel names?
More than the hotel names, actually, a sector which is very similar to the hotel space, but slightly different in terms of their business model is hospitality. Is hospitals. And hospital is a sector which has suddenly emerged into the market as well. Years ago, you didn't really have a choice of hospitals to choose from. Now you have a array of hospitals with recent new listings, right from Kim's, Kowai to the older names, which is Apollo Hospitals, obviously. But I'm saying that when you really talk about that space, hospitals is more clearly better managed than relative to the hospitality space, because in India, tourism, while is growing up, you still find that foreign tourist arrivals is a little muted. Airlines growth in terms of volumes have not yet clearly moved out of the COVID hangover, and therefore there could be a little stress on the hospitality sector.
That pressure or not, because for now most of these stocks including Indian Hotel, Chalet, Lemon Tree are sitting at record high levels. But Mahantesh, what's your view on a couple of these names which are the trader favorites right now? Fundamentals might not be backing it. Jio Financial Services and Vodafone. A value buy or a value trap?
Let's look at it from the business perspective. Okay, from a business perspective, Geo Financial Services is a stock which has growth ahead of it in terms of not just pure numbers, but even in terms of spaces that they can enter into. So Geo Financial Services can get into wide-ranging financial services, and there seems to be no limit in terms of the spaces available to them. It's only a matter of how well they will get capitalized, how fast they will grow the book. On the other hand, the idea which you talked about is a space from a business perspective is already a crowded space, already a space which has limited headroom for growth in terms of pure volumes. But the only silver lining for an idea kind of stock would be if the debt overhang somehow is resolved as we go forward, partly from an infusion of capital into it and partly from its own operations being better, then it could do start doing better. So purely from a business perspective, these are two different segments. These are two different outlooks, but both have a great future ahead if well managed. And therefore, I wouldn't call them value traps at this juncture.
Okay. Well, Enables Housing, the partly paid up shares for rights issue are going to be listing on Friday. That's what the BSE circular is saying. The stock is holding up 8% right now. And the partly paid up shares up 20% after the listing. That's that on that particular stock price. But some of these defense pack movers, they continue to hold higher. BEL being such case in point, that's looking good and continues to do so. Within the Nifty, of course, it's a much more quiet move today, while Bajaj Finance, DRL, Titan, M&M are still continuing to hold on. That's not quite the case with OMCs. In fact, I think for a third day in the running now, they're still in the red. There's SBI as well, which is down. ONGC has gone into into a bit of a pause mode. Today, Maruti, IndusInd Bank also is lower for second consecutive day. Yesterday also you had a sharp downtick on IndusInd, Bharti, ITC, Axis. These are all laggards in trade. Kunal, just a specific call on the way the private banking pack has been moving. Where do you see HDFC Bank going next? Now that it's crossed past that 1400 level, there's a lot of enthusiasm on it being the best buy on dips amidst the large caps right now. And then SBI and ICICI Bank on the other hand.
See, I think price-wise, of course, HDFC Bank could be a lot more lucrative in terms of risk-reward because the stock sub the 1400 levels last week or so, I think was at a very peak point in terms of the negative or pessimistic indicators for HDFC Bank. So what we've seen in the last 1 week approximately is almost like a 100-pointer relief rally for the stock price. But the only zing which is now going to be very, very important to watch out for is that whether short positions get rolled over for the March series, and that would be clearly seen in the next expiry. If that happens, then maybe this 100-pointer rally could be a short-term rally in the stock may continue to go into a drag mode. But if there are less amount of open interest which gets carried forward to the next series, that could be a very strong indication that maybe the entire negativity is actually out from HDFC Bank, and you could see the stock building on to this 100-point gain and slowly and gradually coming back above its 200-day moving average, which is closer to the 1500, 1550 mark. But on the other hand, I think the likes of ICICI Bank is now looking far more attractive, even though the momentum is a lot more staggered for ICICI Bank. But then when you try and compare the top 3-4 names in the private sector banking lot, Axis Bank, IndusInd, Kotak, ICICI Bank, and maybe add to that HDFC Bank, ICICI Bank stands much more stronger. It's confirmed a break of its previous swing highs about the 1050 mark just I think yesterday or day before. So I think that's the one which looks far more relatively far more attractive as compared to the other peers.
Okay, that's the take coming in on which way the banks are headed. Of course, next week you'll have the expiry as well. It's going to be that extended trading session. Remember, the DR side gets tested on Saturday. So March 2nd is going to be a trading day as well, just for a few hours or so. There'll be ICICI Bank board meeting as well. There'll be the VI board fundraising board meet as well that you'll have next week. So quite a few things slated in terms of queues up ahead. And then, of course, you'll have the monthly auto sales numbers as well on the 1st of March. Mahantesh, just wanted to get your sense in on whether or not you think, at least in the auto numbers, a rural recovery glimpse is going to show up, because it's been beleaguered for quite some time now.
Yes, it is indeed beleaguered for quite some time, and there seems to be no respite as of now. I think the respite for that will, on the rural side, will potentially come from any further reduction in interest rates. Okay, now that's not on the horizon, right, for RBI currently, simply because in the fight against inflation is not yet over. So having said that, the other mechanism through which the rural sales can potentially start doing better is if there is a better monsoon forecast ahead. We typically watch out for the monsoon forecast announced on 1st of April, followed by the confirmation of that forecast closer to the end of May, when the onset really begins. So unless we see a better monsoon forecast of these two factors that I mentioned, which is the interest rate and monsoon, the only factor that can influence and make the rural sector do better for the auto companies is the monsoon factor. But it's an event to call for. You can't take a stance on it right now.
So that's the take as far as the auto sector is concerned. But Naresh, wanted to come to you and discuss some of these oil marketing companies. After that massive run up, they're also, coming off a bit. Which are the stocks which have reached the buying zone, if any?
So as of now, we've not reached that zone. Closer to 580, 590 is where you can look at a dip buy on BPCL. Hindustan Petroleum, again, it has to correct a little more for it to become a risk reward buy. So for now, I would wait it out maybe another 3-4% and then maybe start looking at it. I would need a correction of almost at least a 15% knock from the top to actually start looking at it. As of now, we've just corrected 6 to 9%.
Right. Okay, that's the take coming in on some of the OMCs. ONGC also, by the way, that was pretty much in tow with the OMCs. Did see a hard run up, and I think for pretty much most of this week it's been a little bit tempered. In trade 272 is where that stock is. The other pack which is seeing some serious profit taking is also the entire PSB pack. We've been identifying SBI here, but look at the rest of the pack as well. I mean, be it a Bank of India, Bank of Maharashtra, BOB, all of these stocks in sync are seeing quite a bit of weakness actually coming by. Kunal, anything to worry here? Because it's pretty much in sync the way most of these PSBs have fallen today.
I think when you look at the PSU basket, most of the stocks in the PSU basket, whether it's railways, defense, power, etc., these stocks have had their share of 15% broad correction. I think some of them even corrected 30% or so in the last 1 month, 1 week of this price correction for the PSU basket. But I think the PSU banking stocks were moving on a stable upward trajectory. I would not expect a 15% kind of a correction into these spaces, but I would probably believe that maybe a 5% to 7% trim off from their swing highs, respective swing highs, could be a good enough correction for many of these stocks. So, for example, SBI I think hit a level of 770, 775, which means maybe closer to 730, 735 could actually be a very good point where traders could look at a contra buy. For Bank of Baroda, around 275 was the previous swing high. So maybe I think closer to 250, 255, 260 could be a good level to go for a contra buy on Bank of Baroda as well. So not expecting a major correction, but just a minor 5% to 7% trim off from the previous swing highs.
Mantesh, also wanted to get your sense on financials a little more, and I want to address the Goldman note this morning, wherein they have said that the Goldilocks period that the banking sector was seeing is behind us. There are multiple headwinds ahead, and that's the reason they have downgraded the likes of Yes Bank, they've downgraded SBI as well as ICICI Bank. So that's the interesting downgrade coming in, while they've upgraded Bajaj Finance. What's your view on the financials? Do you think there's a further derating which can happen, or some of these names, specifically the likes of HFCL Bank, are within the buying zone?
Actually, I have a little contrarian view of all the sectors that you have. Actually, the financial services is far more stable relative to the other sector. The risks are now quite less. The reasons are, like, I can call out the reasons, three main reasons. One is they are well capitalized, unlike in the past where they would always struggle to raise capital or always on the brink of raising more capital at the cost of dilution. The second reason is they always struggled with quality in their portfolio, primarily in the form of either the NPA ratios being high or the provision coverage ratio being low. And the third reason they would struggle with was the expansion in business, which is credit growth, or it could be even expansion in margins, which is not necessarily linked to credit growth per se, but quite often linked to the underlying interest rates in the economy. Of all these three reasons, if you were to dispassionately evaluate, you will find that none of these reasons have really deteriorated for any downgrade to happen. You have stable names, you have credit growth, which is quite good. You have better capitalized banks, and asset quality is no longer a problem for many of these other banks. It's similar is the case with many of the financial services companies as well. So having said that, the contrarian view to that comes to my mind is that it's one sector that can surprise you on the positive more than on the negative side. There are only smaller issues that they need to tackle. Smaller issues are such that their cost is actually going up. Both cost of operations is going up as well as CASA ratio dipping is causing actually a overall NIM compression, not the underlying interest rate spreads. So to me, if you seek out good companies which have better grip on either the cost of operations or better grip on CASA, you can end up with a positive surprise for most of the banks and financial services.
Coming in from Westlife Food World on their entire cheese issue, saying that they are adhering to stringent food standards. Remember, the Maharashtra FDA had alleged that the cheese used in the Westlife products is subpar. So that's a clarification coming in. And the stock, of course, has been under pressure from the word go today. But speaking with ET now, the Railways and IT Minister Ashwini Vaishnaw today said that India's first bullet train project is progressing at a satisfactory pace. Here's his exclusive interaction with us.
Today I have inspected two sites. First is the site where the undersea tunnel will start from Vikhroli to Thane. That's a very, very challenging project. The project is now progressing very well. Okay. The shaft is getting built right now, as we saw in the morning today. And in the BKC station, again, the progress is very good. This is again a very complex project. This is like 10-story building below the surface and 30-story building above the surface. So that is the complexity of this project. And I'm very happy to see that the railway engineers are today working with a new level of confidence. This is exactly Prime Minister Shri Narendra Modi ji's vision is. His point is that this project should actually give us new technology. We should be able to learn new ways of working. That is quite visible today. So very happy to see the progress.
Okay, flagging at some more stocks which are making life high levels. KFin Tech is up around 7%, sitting at life highs. Astral up 6%, life high level. NCC, Bharat Electronics, Indian Hotel, Lemon Tree, these are the names which are sitting at record highs. Nuresh, what's your take on KFin Tech? What do the charts suggest in terms of the next level to watch out for?
So, not a lot of history, but the trend is positive. Says the last few days it made a top around this 695, 700 level. So, a fresh breakout. The last range was say roughly 100 points. So, expectation would be a target price of 780 to 800 and a stop loss below 700 now.
Mantesh, what about industrials as a pack? ABB, since its earning, had set fire amongst the entire sector because that stock was up almost 20-25% post its earnings, and rest of the names, the Cummins, Siemens of the world, even Thermax, etc., they were all sitting at record high levels. But today there was a note coming in from Axis Capital saying that the reaction is overdone. There wasn't a big change in the commentary last quarter to this quarter, and that's why they have downgraded ABB. Which side of the debate do you sit on, whether you recommend the investors to buy it right now or stay away?
So, many of these names are at the forefront of technology, and we have seen that for quite some time, the power sector, which is both on the generation side as well as on the distribution side, has been a laggard because we haven't seen great growth in terms of overall power consumption per se. But with rapid technology coming in, particularly on the renewable side, there are more solutions that need to be offered for customers, and some of these companies are at the forefront of offering those kind of solutions. You have IoTs coming in the power generation as well as distribution space. You have smart metering coming in, and you have even power generation capacity per se on the traditional coal side is likely to come up. These trends tell us that there are exciting times ahead for the sector, and therefore the technology leaders, which typically is led by the MNCs in India, would start taking the first step ahead and will have the first mover advantage. I would rather sit on the debate that says for a really long-term investor, these are companies that should not be let go of easily. They are not either trading stocks, nor are they stocks which you should avoid having in your portfolio. They are kind of must have, at least now where the sector is started looking up. So I would really sit on the positive side of the debate and look to grab these stocks whenever they fall cheap.
But good to have you on the show as always, Mantesh. Kunal, Naresh will let you go and hand it over to Vinny to find out how the week is closing in.
So absolutely, seems like after touching those all-time high levels again today, the Nifty is managing actually to just barely hold on to some bit of a decline as of now. Nothing exciting that has happened. 22,201 levels is what the Nifty is going to be closing the week at, down 0.07%. Nifty Bank, that is down and out in trade a bit as well. 0.3% decline that we're seeing in Nifty Bank as well. 131 points down on the Nifty Bank. Sensex too seeing a bit of a decline on that front as well. Let's pull up the mid and small cap because that continues to outperform today, and Nifty mid cap closing with gains of 0.2%, while the Nifty small cap also managing to hold on to good gains as well of 0.3% in trade as well. Sector wise, what we're looking at is that today we are seeing Nifty Media as well as Nifty Realty, which has managed to hold on to good gains as well. And Nifty Realty, when you look at it, let's look at the names like Godrej Properties, DLF, what they have been doing as well, because those were the ones buzzing in trade this whole week as well. So those are some of the names that you're keeping an eye out on. Let's look at PSU banks, because Nifty PSU banks, that's subdued in trade as well. Among the top sectoral losers is the Nifty PSU bank, and that is, you look at SBI, that's down and out in trade, 0.8%. We have PNB, Bank of Baroda, Canara Bank, all those are seeing subdued trading sessions today as well. Other than that, let's pull up the top gainers that we are seeing in the Nifty 50 today. Bajaj Finserv is managing to hold on to good gains. Other than that, we have SBI Life. SBI Life also hit a 52-week high today as well. So that's one of the stocks that one should keep an eye out on, as well as Dr. Reddy's managing to hold on to decent gains today as well. Losers, we do have BPCL, HCL Tech and Bharti Airtel, which are down and out. But a lot of mid-cap IT names today were buzzing away in trade as well. So keep an eye out on something like an Emphasis, KPI IT Tech, LTI Mindtree. All these stocks have been seeing a bit of a move today. TCS also among them as well. Let's keep an eye out on the IT pack today. But with that, we're out of time on this edition of Closing Trades on ET Now. It's a goodbye from Team ET.